Yo guys, hope you're doing good. In this video, I'm going to explain the concept of liquidity cycles. There are total 4 phases in the liquidity cycle. So in this video, I will explain all the 4 phases in the liquidity cycle. So basically, what's the liquidity cycle means? If the price is set it up like this, and now this is the liquidity. So after this liquidity is taken out, we should name it as a liquidity phase 1. Again, this is the phase 1 liquidity pool. And again, the market, if the market didn't have sustained liquidity to make the price reverse and take this liquidity, the market will again sweep the liquidity phase 1 and then move the target. So this will be the liquidity phase 1 for the highs. This will be the liquidity phase 2. Same thing as the down. If you see here, now the liquidity phase 1 got taken out, that's why market reversed. So again, here if you observe, liquidity phase 2 has been taken out. I will annotate, it will be clear to you. 1 second. LQ phase 1 and this is LQ phase 2. If you watch this video, you can exactly understand what the liquidity cycle is. So this is LQ phase 2. So after the liquidity phase 2 has been taken out, we should target the another liquidity phase. Okay. Then where's the another liquidity phase? The another liquidity phase is here. So this is our target. Again, here the liquidity phase 2 has been taken out. Let me annotate for you. So after the liquidity phase 2 has been taken out, we should buy the market, right? So therefore buys. This is how the market moves from the liquidity pool to the liquidity pool. So in this video, I will exactly show you how to understand where we are in the phase of the liquidity, whether we are in the liquidity taking phase or whether we are in the building up of the liquidity phase. If you understand this liquidity cycle concepts perfectly, you can know where the market is heading towards. For example, if you are in the market here and the liquidity phase 1 is taken out, you can know the market will continue up until there is another liquidity. So here if you observe exactly, this is the liquidity phase 1 happened. After the liquidity phase 1 happened here, the market again took the liquidity phase 2. So the market is again heading to the liquidity phase 2 of the here. The market is all set up by the algorithm. It moves from liquidity pool to the liquidity pool. That's it. Simple logic. Liquidity. This is the phase 1 liquidity got taken out. Phase 2 taken out. Phase 2 taken out. So phase 1 will be taken out. And again phase 3 will be taken out. This is how the market operates. I will show you many liquidity inducement things. If you see here, this is the clean high. This is the liquidity phase 1. Again, liquidity cycle is setting up. So I can't teach the entries in this video because I leave the entries for my mentorship students. I will just explain the top tip of the strategy. This is the liquidity phase 2. If you observe here, the price exactly reversed after the liquidity phase 1 got taken out. Again, the market didn't have sustained liquidity to make the price reverse and take this liquidity. So again liquidity phase 2 happened. Then the price reversed. Again, if you observe here, this is the last phase, liquidity phase 3. LQ phase 3. Can you see how perfect this is? Liquidity taken out, reversal, liquidity taken out, huge reversal, liquidity taken out, huge reversal. But if you clearly observe here, there is also a liquidity cycle in the down here. This liquidity cycles are on every time frame, even 1 minute time frame to daily time frame. Phase 1, phase 2, phase 3. See, simple, 3 phases. phase 1 liquidity cycle, phase 2 liquidity cycle, phase 3 liquidity cycle. Always there will be 3 times stop hunt happening. If it's to create the high of the day, let's say there is a liquidity from the past, always the high of the day will be created in this pattern. In this pattern, it is the power of 3. Psychologically, if the market is moving like this, like this, like this in 3 times, the people will psychologically think the market is going up, so they will buy here. But after the 3 times market pushing and taking liquidity, so many people, smart money people, will buy from this order block, and they become liquidity to me and my students. So we sell the market here, target the next liquidity pool according to the where we are in the liquidity phase. So you understood, right, the liquidity concepts. So basically phase 1, phase 2, phase 3, that's it. After the phase 3 we don't take the entry here, because why? Simple, the liquidity cycle has been completed. There is no point for the price to reverse here. We should exactly know there are total 3 phases, right? We should exactly know where we are in the phase of the liquidity cycle, because if you take more entries you can't be profitable. You should be like a sniper. Phase 2, phase 3, simple entry. That's it, guys. So again, if you see here, the strategy works very, very perfect. Liquidity phase 1. This is the phase 1 of the liquidity. You can know easily if you mark the clean lines in the charts where the retail people and smart money people take the entries. Those are the liquidity levels. Phase 1, phase 2. Can you see? Again, here on the top, there are liquidity pools. Liquidity phase 1. Let me annotate it for you so it will be clear. LQ phase 1. Again, I am telling, if you understand this simple concept, you can trade the markets, because you can exactly know where the market is heading towards, because the liquidity is the fuel for the price. If the sell side liquidity is taken, then it's an indication of the banks, because banks leave the footprints, right? So it is the indication the banks are going up. Simple footprints, we should follow the bank's footprints. If the liquidity is taken out, then they are entering the market. LQ phase 3, price reverse. Can you see the huge reversal here? So that's why again the market didn't came and take this high. It simply reversed because the liquidity has been taken out 3 times. It is called the power of 3. First time, second time, third time. That's it. The market reversed. It is how the price moves. Price moves. Simple thing. Again, here if you follow, there's the clean high that got taken out. You should identify the clean high that got taken out and use it as a phase 1. Phase 1 liquidity. So what you should do is you should patiently wait for the highs to be taken out, and you should take the entry at the tip. So again, I will not share my entry protocol here. It's only my students. If you want to join, you can join my October bootcamp, which is 5k rupees. If you want to join, you can join. To join, message me in the WhatsApp. I left my WhatsApp number in the comment section. You just text me in the WhatsApp. I will add you. Phase 2. Boom. Again, in the town, if you see, phase 1, phase 2, phase 3. Imagine if you have this trade sniper entries. Everything is sniper entry here. Target this liquidity, and again this crazy buy here, and you target this liquidity, and after this liquidity got taken out, you are in sales, right? Because you know where we are in the liquidity cycle. If the liquidity cycle high is taken out, we should sell the market to the nearest liquidity cycle pool. Simple strategy, guys. Simple strategy. If you have patience, discipline, and mindfulness, you can be profitable in the markets with this edge. Huge profitability. See guys, simply we got 1, 2, 3, 4, 5 trades. Simple. There are many things I can show in the charts. Lot of videos will come in this concept because I am working on this concept recently. They are working like best. I can't stress they are working very best because if we are working with the liquidities, right? We are identifying the footprints of the banks. If you see here, can you see this huge P&L aggression candle closing after the liquidity level? It just means to induce the retail people. What the retail people will think after this black candle is formed? They will think the market will go down. But the market reversion because it's just to induce the retail people and make them sell. But their liquidity got taken out here and the price reversion. That's why after the liquidity got taken out, the price gave a small pause. This is the pause the price gave because the liquidity is exchanged here. The retailer's liquidity is exchanged into the buyer's liquidity and then the price boom. Simple thing guys, simple logics if you can understand. So to join my private group and one-on-one mentorship, just message me on the WhatsApp. I will reach out. Peace guys. Hope you like the video. Subscribe.